minutes of ourselves, and then we'll go about the session. Guru, can you move to the next slide, please? So on a small bit of introduction, my name is Ankit Sharma. I am a managing director with Protiviti, and it's been almost 4 years now. And with Protiviti, overall, I'm carrying almost 18 years of experience. And within Protiviti, we have a TRG practice which caters to this Riskonnect solutions. I have with me my fellow team members, Charlie, Guru, and Yugal. So I would head it over to Charlie first. Charlie, over to you.
Welcome, everyone. Charlie Longridge. I look after global partnerships and our channel to market. I'm very excited and happy to have worked with the Protiviti India team for quite a few years now as we open the market for Riskonnect solutions. So my job in this webinar is really just to link the compliance obligations and controls and related risks to how we can actually digitalize that, and then also help you look at some visuals of the software itself and potentially to set up further meetings as a result of that. Thank you. Yugal, I'll pass to you.
Yugal, over to you, please.
Yeah, thank you. Hello, everyone. My name is Yugal Mehta. I'm part of the Protiviti team, being in the GRC practice, and I've got experience of more than 17 plus years now. Being into the GRC team, compliance is one of the key areas or focus, I would say, that we work around. And today we've got this opportunity to kind of how do we take the compliance approach, how do we understand it better, and how do we take it to the next level when technology is embedded while applying compliance program. Thank you. Over to you, Guru. Guru, you're on mute.
Hi everyone, good evening. My name is Guru Rao. I am a part of this TRG team reporting to Ankit. I am taking care of the Riskonnect practice with over 20 plus years of industry experience. Very excited to go ahead with this webinar today.
So just to set the context while Guru is sharing the deck, we will be providing you the deep insights about this new compliance regulations that we have, and how it would be, how the solution which is Riskonnect will able to help you navigate and automate this seamlessly across your overall organization. So Guru, over to you. Let's start with the presentation. We also have a last 10 minutes demo of the product, so please stick around. So yeah, Guru, over to you.
Thanks Ankit for setting the context. Is my screen visible now, the deck?
Yes.
Yeah. Okay, so today's webinar's objectives is to have a description about the current compliance landscape, and predominantly for Indian terrain, if you see, there has been quite a buzz around the regulatory compliance, and this has been significantly increasing over the past recent few years. And there have been various factors contributing to the compliance of regulatory obligations in India. What are the various drivers which we would be looking into the subsequent slides? And to name a few, if you see, this DPDP Act has been very predominant, and similarly cybersecurity with the advent of AI and ML, all these things, and with a lot of digital transactions that has been happening irrespective of all these segments, this compliance has taken a high leap here in India. And we would also be discussing about the importance of leveraging the technology. Because when we talk about technology, it's not just the usage of a technology which serves that one purpose alone. How robust the technology that we would be putting to use to handle this compliance management, that's very important. So what are the factors to be considered while evaluating prudent technology? That also we would be discussing in one of the subsequent slides. and data and analytics and how timely and reliable insights the tool will have to provide when we put a tool to use for our compliance management or any risk management purpose. That also we would be discussing in the webinar. Now, so as I said some time ago in my beginning, that there have been various factors that have been contributing for the compliance in Indian terrain. We have the first and foremost, like we have chosen a few items here. Of course, we will not deal with the entire thing here. To name a few, if you see, protection of consumer interest has been completely focused in India because there have been a lot of regulations that have been published by not only by SEBI but also by RBI as well as IRDA, because not only in the banking sector but also into the insurance sector, there have been a lot of such regulations. And not adhering to such regulations, what are the repercussions, that also we would be seeing one of the in the subsequent slides. Same way, if you see data privacy and protection, we have a separate act in India called DPDP Act that has also been emphasized a lot, and data security is yet another feature. So most of the organizations have been focusing on all these things. Similarly, if you see adapting to digital transformation, that is yet another factor that has also been considered for compliance and regulatory obligations. Now, when we had conducted a survey. Okay, so Protiviti as an organization, we keep publishing white papers and we keep publishing some surveys as well. So as a part of the compliance, we really wanted to understand what are the top 10 compliance-driven risks in India pertaining to the Indian terrain. These are the few top 10 risks that we had identified as a part of the survey results. There are two quadrants here. One is for 2024 until the end of this year, what are the top 10 contributors? Same way, after a decade, what are the other top 10 compliance-driven risks that we have identified? Now, looking closely at these two tables, we can find that there are few items which we have highlighted in blue color and in red color. So these red color items denote that they have a high rating of risks here. And even over the passage of year from 2024 down the line till 2034, if you see this data privacy would still be on the increasing trend only. Similarly, with the advent of AI governance and ethical compliance, or AI and ML, so because we are already into the AI-driven world, we have already stepped in lot many activities, lot many transactions that we do in day-to-day official purposes. All those things we have put AI and ML to use. So AI ML related risk factors would also still continue. Similarly, quantum computing and cyber security is yet another compliance-driven risk that has been envisaged for the year 2034. So all these things, and we also find that the third-party risk management, while it is low, we also find a declining trend for that alone. And now, I also mentioned that while the compliance and regulatory obligations, adherence to regulatory obligations is very important, and that has been enforced in India, there are many lessons that the industry has learned, and we have a bunch of best practices across the segments, not confining to one financial segment. It could be throughout the BFSI or any other segment. Mr. Yugal, I would hand it over to him because he would throw more light onto this in the subsequent slides. Over to you, Yugal.
So just giving a snapshot of actions which are taken by RBI, IRDA, SEBI, etc. But before we get into that, I would want to start with basics. Like, if to put it simply, what is compliance? I would say it's playing the game by the rules. Like, say for example, chemical dump waste cannot be treated by the factories in the manner they want. The waste has to be properly disposed of in a proper standards, in a compliant manner, so that's not harmful for the society or the people out there. So from a compliance perspective, it is also important, as the society, the government, the regulators, they kind of set off these boundaries, and it eventually only helps the company to protect its interest, people, and assets. Now, if I were to ask why do we need compliance, rather I would not say compliance, I would say enterprise compliance, because when I say compliance, it includes all sort of compliances, which is legal compliances, regulatory compliances, internal operational compliances. So why would we need a good enterprise compliance program that helps in boost the reputation of the company, because it lives with the ethics? So like, say for example, a company needs to be a ISO certified company, or the educational institution, they are accredited by NAC, or the food industry, they are being regulated by their entity and they have to follow such standards. So one, it helps the companies to boost their reputation. Two, it also enhances the customer loyalty. So like, if I were to speak about a simple example of Apple products or Apple phone, the major driver for them is the privacy that they provide, or the safety that the products have. That's the major selling point for them. So it also helps you enhance the customer loyalty over there. Three, it improves the business operations, because when a good compliance program is integrated in the business processes, it goes beyond the scenario of risk avoidance. It kind of helps streamline the operations, and it also helps in eliminates the inefficiencies and set the accountabilities at a process level also. And the another important point is it helps attracts and retain talent, because today's younger generation, they live by values, ethical practices, and corporate responsibilities. Like for example, there is always a shortage in skilled resources in the cyberspace. Or if I were to speak from an insurance parlance, actuary is one of the niche, I would say, capabilities that we have. And last, it helps the company to drive the revenue. It can be a revenue driver, because the compliance program will set aside the company from the competitors, and it will open new opportunities. Like for example, the government contracts would require specific compliance standards to be followed by a company, or a security team which always has to comply with, say, a SOC 2 or HIP AA. So having a strong compliance program embedded into the company kind of helps you achieve these objectives. Now, if I were to speak about a few value created by a good compliance programs, it will ask, like, you'll have customers will pay more. So Apple was one of the examples that we already spoke. But if company have strong compliance program, customer may pay more. Like for example, applicable where privacy and security are the top concerns, such as technology and finance. So for security teams, maybe this underscores the importance of integrating the companies into the security strategy. And it would also help enhance the product value. Like say for example, today sitting at home, buying a car insurance digitally online through various insurance portals that we have. And customers may also prefer compliance over flashy products and features. So I would say compliance is more than just a feature. And if you look at the slide, we've just kind of collated a data spanning through right from 2019-20 to 2024. We can see licenses cancelled for 8 regulated entities and their operations were seized. 23 banks were penalized. 7 insurance and insurance brokers, who are the insurance intermediaries who sell insurance products, are being penalized. We saw 29 cooperative banks being penalized over here. 2.4 crore, that's a huge amount for one of the entities which was penalized. So the highest amount for an entity was 2.41 crores. In all, if we sum this up, it is 39.97 crores of only this collation that we've done right from 2019 to 2024. Approx 40 crores of total penalty being levied on these regulated entities, and 25 NBFCs were also penalized as part of this. So this really demonstrates the importance of having a good compliance, people understanding them, and how do we implement that. So if we move on to the next slide, there are we've just brought a few examples over here of how enforcement actions and best practices could kind of help through a few scenarios of non-compliances. So typically that we see from a non-compliance per se, we see inadequate KYC practices at banks, financial institutions, insurance companies, wherein the savings deposit accounts opened by ineligible entities, or insurance premium collected by the intermediaries not transferred in a stipulated time to the insurance company. If we look at from an improper loan practice per se, we see loan sanction without proper due diligence over there, or cash premium collected beyond a threshold without KYC. So from an AML KYC standpoint, this is also very much important. So likewise, we see there are a lot of other non-compliances also, like from a governance angle, directors not meeting the fit and proper criteria, failure to reconcile the board of directors, timeline set by RBI not made to constitute a BOM. So what are the best practices to kind of avoid such enforcement actions? To have periodic reviews done, timely implementation and dissemination of the regulatory compliances, protect customer data confidentiality through digital lending, conduct regular internal audits, have risk assessment being done. So these are a few best practices that could be followed. Next slide, please. So I already touched upon these things, various scenarios. These are a few examples of a few regulated entities, or a few payment bank or banking sector or insurance companies which were penalized for the offenses that they had, and we've quoted that over here with examples also. So if you look from from an insurer perspective, the insurer made indirect payments to the motor insurance service provider, who are the automotive dealers for me, and the designated persons on the name of the advertisement and professional charges. So any sum or amount which was paid other than the official commission, which is regulated by IIA, the company was held for that, and they were penalized to a tune of 1 crore. If we look for a leading private bank, non-compliances of KYC AML standards, tuning to 20 lakhs penalty being charged, or the bank failed to comply with RBI directions to submit details of proposed action plan for dilution of promoter stakeholder, amounting to a 20 lakh penalty over there. So if you look at the entire landscape or schema of non-compliances that we have, we see these are not just transactional non-compliances. The non-compliances pan across governance, setting up of practices, process, people understanding compliances, how do we implement or build a roadmap, and then track of how do we do that. So if I were to speak in a very simple language, the most critical thing would be building a winning compliance program. Now, what would that be? Understand what we need to comply with. Example, a lot of times there are a lot of interpretation issues on various guidelines, circulars issued by the regulatory bodies. That should be very clear. Develop clear policies, setting governance. That is again very important, because setting a tone from the top, setting up accountabilities, clear segregation of duties kind of helps have a seamless compliance program. Training the team, again, one of the most important aspect, whether we follow zero tolerance to a non-compliance, should be disseminated to the team. Monitoring and review. Compliance is not just a one-time exercise. It's a cycle. Circulars, guidelines, they keep coming now and then. We need to comply with them and include or implement that within our company. Leverage tools. And if I were to only speak maybe on a few best practices of how do we manage the compliance risk overall, I would say doing regular risk assessments, clear roles and responsibilities been set out, continuous improvements, engage stakeholders. And if I were to tell how do I do that, maybe embrace some sort of technology. This kind of helps manage all these aspects, manage the compliance program in a better and efficient way in the company. Yeah.
Okay, thanks. That was quite insightful, Yugal. So now let us move to the importance of technology. Okay, so as I told earlier, we have been conducting a lot of surveys and polls, and based on that, if you see, we found that 70% of the leaders, they are not confident in their current risk management policies or and their practices. Because most of the organizations, they tend to have a temporary solution which serves that purpose alone and which is not completely tied with the rest of the segments in this entire gamut of GRC. Okay, and it has to be completely stitched. Only then it would be completely efficient and effective. Similarly, if you see 80% of the leaders, they are unable to proactively detect the risk-related issues. Most of the time, if you see the leaders and the organizations, they they devote a lot of their time in finding out what has happened and not in how it had happened. And there is no proactive mechanism to understand these are the risks that could be envisaged. There is no alert mechanism kind of things. So these are the kind of lacunas that we have identified. Similarly, again, there is yet another 80% of the leaders who at least agree that they lack integrated risk process and technology across the organization. So which is once again revolving around, or which is once again going back to a completely stitched solution, which would provide a holistic view for the top level management as well. And the entire risk management and compliance management could be seamless. Yeah, now over to you, Charlie.
Thank you, Guru. So I think here we just want to touch on interconnected risk. We've talked about compliance, which is a key driver for managing risk. And we also want to not make this sound too daunting on everyone to manage obligations, especially as they change in such a changed environment, but to really embrace compliance and to keep ahead of the game. And to do that, you need to manage risk. That's quite obvious. But managing risk can be quite tricky, especially in complex organizations or complex markets where you have to adhere to certain obligations and you have to embrace it to be more competitive. When we have all the relevant information in terms of obligations, controls, and risks in one system, defined by good framework or process, supported by a trusted partner such as Protiviti, we then look at technology to try and map that information. Not so much a tool, but a system where people have bought into it. So what you see here is potentially what it could look like in terms of a landscapes of lots of different types of risks that we're looking to connect, to look at a more holistic view in terms of how we prioritize. We're not just prioritizing on high, medium, low impact, but we're also looking at clustering this information, strategic risks, financial risks, digital risks, regulatory risks, and so on, and therefore prioritizing and investing in the relevant mitigating actions, but also controls, and of course, fallbacks. In the event that these risks actually do happen, we also can't forget about resilience and the management of those business continuity plans to recover to a position and put us into a strong place. We'll come on to other information relating to this, but I think it's important to understand that risks nowadays are highly connected. And if we embrace that in one system, as opposed to multiple silos and other systems, then we have more of a chance to comply and satisfy our audits and ultimately be more competitive in an ever-changing market. So talking about how this has evolved, how have we got to the position that we're currently in? Well, clearly, the market is getting more global. It is getting more competitive. People historically have understood risk. Ever since people went to war, they've understood risk and the impact of that being quite catastrophic. So our understanding of risk has always been there. However, historically, we've always focused on risks and compartmentalized them in specific silos. We generally have a culture of running away from problems, and therefore we try to treat risks individually as opposed to grouping them together and connecting that information. So the focus is good. However, sometimes that allows risks to be compartmentalized, even hidden in certain functions, departments, even within processes. And we don't embrace the communication and therefore collaboration to mitigate those risks before they become issues and potential losses, which could lead to a compliance failure or audit failure. So we want to try and make sure that we are more connected, that we have visibility. One way of doing that is to appoint people who are accountable to make sure that these risks are transparent, that they are communicated and consolidated in a view that makes sense. In other words, linked to certain objectives, to comply to certain obligations, to satisfy certain governance standards, and so on. But ultimately, we want to make it transformational. We want it to drive business performance. We want to succeed in aligning risks and opportunities to meet our strategic objectives. Now, in the world of compliance, that's firstly having a real understanding of the obligations, of the relating controls, and acknowledging across all of our process owners that we're meeting those requirements, including third parties as well, because you're only as good as your delivery partners as well, and the reputational risk can be very high. So we need to be more transformational. We need to look at risk adjusting the balance sheet. We need to make sure that we drive business decisions by linking and prioritizing clustered or consolidated risks, connected risks across the landscape of the business that we do, understanding the external and emerging risks, and aligning those to our key objectives, our business plan. So let me introduce Riskonnect, and it's important to understand that Riskonnect is not just one software solution. It is a multitude of solutions brought together to provide the best of breed solutions covering all risks under one roof. And risk and compliance, as well as business continuity, operational resilience and crisis management, and even insurance, including safety, are key components that we can cluster into one landscape for managing risk, to have a full picture of how to manage risk and to achieve our goals and objectives as any business. So Riskonnect really does, with its partners such as Protiviti, strive to help really share best practice in terms of not just the software, but also the framework and process that it requires before software can be implemented and before software can be effective. Software is only as good as the people and the process that have been created before it can be successfully implemented. We always look at an end-to-end solution. We want to plot a journey through these different areas. So starting with risk, compliance, corporate policies, internal control, satisfying audits, certifying to ISO standards, meeting the latest obligations, looking at specific types of risk, whether it be information security, technology, whether it be third-party risks, project risk, and also, most importantly, let's not forget our environment. And we might have heard of this quite a lot more recently, environmental social governance, as it affects us, not just to satisfy obligations, but also looking at this from a social perspective and making sure that we fully understand the implications of what we're doing and how we can contribute to a far safer, more environmentally rich society. That also affects third parties as well. So we need to monitor those third parties because, again, we have the reputational risk which can be contributed from third parties that can cause a lot of business interruption. So the strand in blue really does tie quite nicely together to satisfy our obligations relating to the latest compliance standards, all the way through to the latest obligations that we've talked about, the RBI, IRDAI, but also looking at this from the perspective of what we now need to embrace in terms of carbon calculations from an ESG perspective, delivering IT projects in line with COVID, but also looking at other obligations throughout the organization. Now, risk obviously has a life to it. Some risk will happen. We need to be more resilient. We need to have the right recovery plans and do the right business impact assessments. We need to look at risk and resilience as one, especially at an operational level in big financial services institutions, but also mid-market providers that are really striving to grow as well. They're under the same obligations as the bigger banks too. Managing crisis, having better understanding of threat intelligence, and of course, the emergency notifications, what to do in an event that does actually happen. And then finally, we can't just look at risks in terms of things that haven't happened. We also need to manage risks should they turn into an impact or loss. And this really does overlap into health and safety, but also financial loss, to which we can manage our claims should we have the appropriate insurance. And that's a key part of risk transfer as part of our risk reward strategy, getting the right balance between how much we insure and how much we mitigate. As an organization, we are global, we have to be, and we look to satisfy all of our clients, but also try and benchmark and provide a better understanding of how to adopt technology to map to your frameworks and process, and most importantly, being super agile. So our software on the GRC side, working very closely with Protiviti, sits on a low-code, no-code platform to really give you a more agile platform to embrace change as well. So nothing can be fixed in stone, that you can self-administer and that you can deliver the solution very quickly and easily, whilst also integrating with your core systems. We like to think we're an industry leader, as do many software providers, but what really sets us apart is the fact that we can embrace all risks under one roof relating to meeting your compliance obligations and satisfying these audits. So that's a good introduction to who we are and really what we stand for. So let's put this more into the context of why we're here today. So I think we understand some of the the summarized obligations that we have on the left-hand side. Now, these obviously need certain tools to really ensure that we meet these obligations. And they also involve certain stakeholders, the head of compliance, the head of information security, the CFOs, the finance directors, the financial controllers, all the way through to the managers and operators as well, even supervisors on site in risky environments. So we've got to make sure that we understand these obligations, the relating controls, that we manage that in ideally one system, one platform, that we involve different stakeholders to advocate accountability and also transparency across those overlapping domains, as you can see here in blue, green, and orange. Ultimately, though, we've got to see the wood from the trees here. We've got to present it in a way that it's also understood. How are we meeting these obligations? What are our priorities? Where are we not doing so well? Where have we ignored certain obligations or not attested to them correctly and acknowledged them? Where we need to review and prioritize certain controls, where the controls have failed. So these we need to turn into leading indicators so that management and executives can prioritize the resources that we have to focus on the areas of weakness. And the insights, the reports have to be personal. They have to be relevant to your business plan, the obligations that you need to meet as a business, despite whether you're a real challenger in the market or you're protecting your leadership in the market. The key benefits are obviously quite apparent if you do it right. And I think the key comes down to people, process, and then being able to digitalize it in a way that really embraces that change. In other words, simple, easy to view, accessible views that really represent your framework and process with the ability to evolve over time through local configuration and administration. So some of these benefits improve operational efficiency, staying compliant, reducing any sort of legal obligations by, again, being ahead of that in terms of potential fines, increasing the automation and therefore productivity. Ultimately, we talk about protecting your brand. I think let's be more compliant and therefore turn this into a competitive advantage so that people recognize you as a trustworthy insurance provider, broker, banker, whoever you are.
Thanks, Charlie. That was more informative. Okay, so now coming back in terms of providing an end-to-end solution. For any solution to be effective and efficient, there are three factors that are very vital. One is process, other one is people, other one is technology. All three will have to be hand in hand, and the success of the solution completely relies on how involved all these three are and how effective all these three factors play there. Okay, because a chain is as strong as its weakest link. So if one of the factors go down, then the solution cannot be successful here, the entire solution. So all three factors will have to play equal role here. And now talking about the solution consulting, we from Protiviti, I think we are, I can proudly say that we are pioneers in this GRC arena, and we have been providing excellent solution consulting over the past many years. And we have our own advisory services also. We work hand in hand because the technology team alone cannot work. We have our advisory service also working here. We create a synergy in working closely with the clients and the prospects and winning their confidence. We understand their requirements first, and we also help them in devising the GRC strategy, or we also devise them the GRC framework. And we make sure that the organization is completely up to date on their compliance content as well. And on need basis, we also understand the pulse of the customers, and we provide and we impart training after creating an awareness on the GRC to the prospects as well as the clients. Now coming to the product, okay, which is the technology. So here we have been discussing about, in fact, Charles has dwelt a lot about explaining about Protiviti platform. Most of the time, I always used to refer to this particular product as the panacea of all the problems. We also, in one of our slides, we saw the title like one-stop solution prior to Riskonnect. I generally refer to it as a panacea because for anything and everything related to the GRC, if you need to have a one-stop solution, which is nothing but Riskonnect, that's how we have been working, and that's how we have been deploying solutions as well. Now, with our vast expertise in the process as well as in the in our consulting domain as well, when we work together along with the clients and when we use this particular prudent solution, we are effectively able to provide any risk management. You call anything under the arena of GRC, be it risk management or compliance management or internal audit or third-party risk management or control monitoring, anything and everything. These things have been seamlessly happening, and this can completely happen. And there is another factor here which I haven't even spoken now, which is the clients and the prospects. Unless you people have the confidence on this particular teamwork, and once you start seeing the success, the entire success of the solution is complete. It becomes a testimony only at that point of time. Now, since we spoke about a Riskonnect platform, let us also have some differentiators. See, there could be many solutions in the market which provides which serves that one particular purpose alone, but it might not be stitched with the entire gamut within the a GRC. So now, in what way is a Riskonnect completely different from other solution? Here, if you see this particular tool, this provides an unobstructed flow of information across all parts of the organization. So when I talk about all parts of the organization, there is one more dimension also here. Typically, we also have a demo where we will be demonstrating to you these screens as well. The kind of view CEO would like to have on these organizations' risk and its related risk appetite, that need not be the same for a safety manager or a compliance manager or a CHRO. So based on the functional access and role-based access, each and everyone will have a different view. This is one aspect, having a different view. Other thing is, this information is getting stitched between different departments of the organization as well. Similarly, same high quality real-time data must be accessible by all authorized stakeholders. I just mentioned about functional and role-based access. It's not that everyone would be having access for the entire set of data. Based on the role that each person plays in that organization and based on the need, what kind of data that he or she will have to get access to, that kind of configuration is highly possible in this Riskonnect solution. These are few differentiators here. And information sharing and collaborating on actions is made very easy in this. In one of the previous slides, if you remember, I also mentioned about most of the organizations devote a lot of time in figuring out like why this has happened or what has happened, right? So now the compliance stakeholders, they spend more time focusing on why instead of not what had happened, and investigating the issues and understanding the irregularities and finding the solutions and creating a value proposition. Over to you, Charlie, on the ROI.
It's also really important to hear from the global analysts because they're independent. Forrester is one similar to Gartner, and they completed a total economic impact study to help organizations quantify the potential return on investment of our solution, Riskonnect's GRC software. This study took an in-depth look at one financial services firm in the US who had implemented a Riskonnect GRC solution, including enterprise risk management, internal audit, compliance, and third-party risk management to project a 3-year return on investment. Prior to using any software, the financial services firm noted how their organization relied on Excel spreadsheets. So tools, silos, very fragmented, no real sort of joined up system that we talked about earlier. That firm used those spreadsheets to track enterprise risks across the organization. However, it became quite cumbersome and also reliant on one or two individuals who, if they had left, would have created an even bigger impact in terms of understanding how to actually navigate the models, make any changes, and so on. However, this solution was really manual, and it also exposed the organization's program to potential financial losses as well, because the emphasis was more on risk admiration as opposed to risk mitigation, the management of risk. They spent too much time, in other words, tweaking the solution and presenting it to different people, as well as collecting information. The quality was therefore lost, and therefore they took on a lot of losses because a lot of these risks weren't being managed effectively. Financial analysts also found that this particular organization experienced a lot of benefit of, I think, over 2.6 million over 3 years versus a cost of nearly 683,000, adding up to a net present value of 1.9 million and a return on investment of 280%. So with the system in place, they really did, and they could recognize that a significant return on investment. What is probably most important is to understand what the key findings were. Firstly, from a cost-saving perspective, they were able to reduce the effort, the manual labor it would take with a system in place. They were able to streamline the third-party risk management workflow, which again was quite cumbersome and took a lot of time to do without a system in place. And ultimately, they managed to avoid, over that period, many regulatory penalties. So what we're seeing here, therefore, is better productivity and a reduction in penalties. The study also offers an insight into benefits that aren't as easily quantifiable, including the advantages of managing risks in real time, more proactively, and with better visibility across business units. In other words, reducing risk duplication as well. We might have heard this quite a lot. We've got to be more proactive and less reactive. And compliance especially, we've got to make sure that we embrace these obligations, that we're ahead of the game so that we can be more competitive. The only way to do that is to really push those controls out, make sure people are aware of them, make sure people acknowledge that those controls are in place, and if not, be open, change the culture from blame to open to really make sure that if controls aren't working, they put those remedial actions in place, they manage the risk, and they mitigate any further potential loss from actually happening.
Okay, I think there was a poll that has been conducted right now as Charles was explaining this. There are a few participants who have responded back to that. Vanshita, can you publish the results, please?
I'm not sure everyone really had the chance to respond.
Yeah, Vanshita, is it possible to publish the poll?
So, Guru, in the meanwhile, why don't you move on? I think till the time we can work on the poll
Yeah.
as well.
Sure. Yeah, Charles.
I'll spend a few minutes on this. I think the key thing with dashboards is that it has to be configurable and customizable. It has to represent what you really need to look for and therefore be presented with and monitor on a day-to-day basis. It has to be the simplest way into the solution as well, so that you have not only the line of sight, but the ability to address the things that really concern you. So you may spend a lot of time understanding what is the best dashboard for the organization, but the most important thing to understand is what is the most relevant dashboard for the key decision makers to go in and really address any potential concerns that they may have. We've moved away from just looking at high, medium, and low risks relating to meeting certain obligations nowadays. We're now looking at key risk indicators, key control indicators. The common word being used there are indicators or leading indicators. So we've got to make sure that when we prioritize our efforts to meet certain obligations, that we have the right visibility, the right views to quickly address those potential concerns before they actually happen, being proactive again. So whilst these visualizations, if you go to the next slide, can be good and impressive, the key here is to make sure that you can get what you want and make your own changes so that you can address the needs of those key decision makers that need to go in and address anything that needs to be addressed as quickly as possible. So real-time access to data, looking at certain trends, preventing you exceeding certain thresholds, managing levels of appetite, keeping abreast and ahead of any potential breaches. If breaches do occur, then to implement the right business continuity strategies and recovery.
Okay, now let me share my screen. Let us have a demo of one particular use case. For ease of understanding, we have taken an asset management company based regulatory obligation for the demo. Let me share that 1 minute, please.
Everyone, now let us see a demonstration of how easier it is configuring a regulatory obligation along with its related controls, requirements, risk arising out of its non-compliance, mitigation plan, assessments, etc. in our Riskonnect platform. For ease of understanding, we have taken a use case pertaining to asset management segment. As explained earlier, this tool provides role-based functional access. In our case, when a compliance officer from ABC Asset Management Company logs into the portal, this dashboard will be the landing page. Based on the functional role access, well, this is how the dashboard looks for the compliance officer. A compliance manager or a CHRO will have their own view of dashboards. This leverage on the Lightning version on the Salesforce platform to have a flexible looks and feel user interface. This allows us to change the layouts and representation without any code change. The first tile on the compliance of your dashboard represents the breakup of the number of regulatory obligations with their impact, wherein we get to see there are two obligations along with the impact. One is regulation with high impact and the second regulation with medium impact. And we have also impact low with the categorization. The next tile gives a graphical representation of the number of policies read by the logged in user. That is the compliance officer in our case here. The third tile provides a graphical representation of the open compliance activities performed by the logged in user. Additionally, when we further drill down, the tool also allows the users to have a report view. And the same can be downloaded in Excel or PDF format. This is the look of the report formats. The system also provides the flexibility of changing the graphical representation on the fly from a pie chart to bar graph without any code changes. This is one of the cool aspects of the low code, no code feature of this platform. Again, this change would be applicable for this user only, as this dashboard is for this role of compliance officer views alone. How we are going to edit the display and edit the dashboard? You can click on this edit and select edit. You can now change the display from donut chart to bar chart, and you can see the preview once you update and save. The pop-up said dashboard save changes. We also have an incident dashboard where you can view incidents reported along with their categorization, like if it is an internal fraud or external fraud, etc. Now coming back to the compliance dashboard, based on the control test results, Riskonnect would automatically display the controls with appropriate color coding, green for pass and red for fail, and the testing frequency as monthly, quarterly, or yearly. Now that we have seen the dashboard of the compliance officer, we will also show you the organization hierarchy that is pertaining to this use case, which is ABC AMC. Here we can see that ABC Asset Management Company is the main entity. The entity can have one or more location. And here we have considered Mumbai as the only location. Just to let you know, within a location, we can have one or more departments. And we have compliance department, which also has reporting department as a sub-department. Now let us drill down further from the reporting department, where we have already added one regulation. Now when traverse to the tab named Related, we can see that Riskonnect provides means to configure associated relevant policies, process, objectives, regulations pertaining to the business unit. In our case, we have configured one SEBI regulation named Reporting by AMC to SEBI. Let us drill down further to understand the details of the regulation. Here we can see the owner who created the item in the tool as well as the type of regulation. Example, regulation, statute, bill, act, and guidelines, and so on and so forth. Another cool feature here is that the solution allows us to add extra fields that will be visible on the screen or modify drop-down options based on the existing records. The tool also allows us to configure the URL to the regulatory policy. It also allows us to set the review frequency, which we have set as quarterly. We can also see that it allows us to set the impact of the non-compliance of this regulation, which we have set as imposing penalty fine, and its impact as high in this case. We can also see the relevant color coding as red for high impact. Now when we come to this requirements tab, we can see that control test reporting as the requirement set. This tool also allows to create a new requirement by clicking on the new button. Let us further drill down the requirement that has been configured here. Here we can get to see the requirement description, which states that AMC has to submit CTR reports within 21 days from the end of the respective quarters to SEBI. Here we can get to see the requirement description along with its name. It is highly possible that a requirement might have one or more sub-requirements. Two, keeping that in mind, we have created a sub-requirement for this main requirement, which has been configured here in the sub-requirement tab. Now coming back, the control templates can be created and configured here, and we can see reporting checklist as the control template that we have created. We have further drilled down the control template by clicking it, and here we can view its category, that is compliance, financial, human resource, legal, etc. We can also create associated controls, and we have created one named checking CTR under compliance category with mixed implementation type. As it involves manual activities as well. This control has been classified as preventive, along with the frequency set as quarterly. And all these are mapped to the BU, that is compliance department. The tool also gives a pictorial representation of the correlation of the risk to a compliance, a squid diagram. We can see the risk associated along with a requirement to this relevant control. Now to perform this control, we have also created a test procedures that the control owner can test and evaluate the results. Here under the test procedures, we have created two procedures to carry out the testing. Now under the test tab, we can create one or more test assessments, and here we have created two control test assessments. One is self-assessment and the second one is design, along with the results. Having performed the test, we can mark the outcome as pass or fail, and visibly they got colored coded as green or red color. The tool allows us to set and configure mitigation plans for the failed scenarios. Such mitigations are configured under the tab action, and we have created one such action here, automatic alert report. If we drill down the created mitigation plan, we can view the owner of the plan, mitigation completion date, along with the relevant control name. The tool also has automated proactive email alerting system whenever a control has been created, or 5 days, 10 days prior to the assessment, on the day of assessment, or escalation after the due date of the assessment, in case assessment has not been carried out. Same way for the mitigation plan as well. The tool also allows us to configure the risk of non-compliance of the regulation. Here from the title, we can see that the impact of the non-compliance is penalties and registration cancelled. Based on the actions performed so far, like performing the assessments, action taken, etc., the dashboard will reflect the relevant data based on the role and access of the logged in user, who is a compliance officer in our case. According to the backend data, system will directly show the relevant results on the front of the dashboard on a real-time basis. Thank you, everyone.
Okay, so that was a demo by Mr. Sachin, who is a certified chartered accountant. I think we have few questions here.
Yeah, so there are some questions, Charlie. I think we can take all of those. There are 3, and we have also questions that we gathered before this webinar. So Charlie, the top 2 questions, the second question is primarily is for the solution, and I think you'll be able to answer it. Hi, is the Riskonnect customizable, as each industry has different compliance and related risk, like risk for a fintech involves may not have the same compliances as medical device company. So is it highly customizable?
Sorry, I just checked I was on mute. Yes, it has to be customizable, but I think the first thing that we do with Protiviti's help is really map to your framework and process, and also look at your risk templates and the data that you've currently got. Before you implement software, the most important thing is to check that the data you're about to put in it is up to date. So doing a quick health check of the relevant compliance obligations, making sure that those feeds are working, making sure that the integration is working with those external bodies that provide you those feeds. I mean, Thomson Reuters, LexisNexis. We also use Protiviti to import those feeds as well. Making sure that the taxonomy is right is key too. So all of this configuration is done with ourselves and Protiviti on site, assisting you in terms of giving you the best starting point. Once you're up and running, then yes, you can also make those changes yourself. So whatever knowledge we transfer during the implementation will allow you to evolve your process, your framework over time as well. Of course, you can come back to Protiviti, even ourselves, for some advice in terms of what other companies are doing to address certain obligations, in terms of who they should get involved to manage these controls and so on. So all this information is something that we can help you with, given the number of customers that we have globally as well. Hopefully that answers the question.
Yes, it did, Charlie. And I think it also did answer the question 3 from Mr. Balasubramaniam. So Mr. Balasubramaniam, yes, Protiviti will help you prepare the compliance checklist, because we are a consulting organization and we have a repository, and will be helping you to prepare those checklists, surely. There is one more question saying, will this approach also cover fraud risk in an organization? Yeah.
Yugal, you're probably better to respond to that one. I mean, from a
Absolutely.
software
So-
perspective, we can, of course, but it's the content that's key here. I think.
Exactly. Yeah.
Yeah.
So I would say fraud risk is an integrated part of the operations, the BAU activities, daily activities that we do. So while addressing the risk holistically, or we prepare a framework or the approach that we prepare to address those risk or compliances, fraud risk automatically get covered as part of that. And as you correctly said, there are a lot of fields which go into the Riskonnect tool. So while building that risk taxonomy or the library that we prepare, fraud risk, of course, will be taken care of again at that point in time.
Thanks, Yugal. Guru, you have one questions with you. I think we are actually over 6 minutes already. I think we will take one more question.
Yep.
So yeah, quickly if you can ask.
Yeah, so there is one more question from one Ms. Sonali. Is Riskonnect customizable as
So
each
that has
industry?
been,
Okay.
correct. That has been answered. So one of the key question that we received, Charlie, is can this solution also be integrated to any ERP, any existing ERP solution, or any other core banking system in the BFSI space? See, I know the answer, but I think we should hear it from you.
So when we position software, we have to make sure that we satisfy the investment that you put into other software solutions. Some of the most expensive, but also most important business critical applications tend to be financially based applications with real live data. And in order for us to manage risk at a business or operational or compliance level, we need to identify and assess and link risks to that data. So integrations with ERP solutions like SAP, such as Oracle, even Microsoft, I think is something we have to do. But before we do it, we have to firstly define, number one, why we're doing this. Number two, who needs to be involved, what the process is in terms of the layers of integration, the objects which we need to point to. The good news also is that our software, purely technically, sits on the Salesforce platform. So it has multiple connectors with most of the mainstream solutions out there. It also has a MuleSoft API capability for any bespoke solution integration. Because I know a lot of organizations have homegrown solutions, maybe legacy, but they can't get rid of them because they're so important and entrenched within organizations. So yes, we look at integration. It's very important. But before we do any integration, we need to understand why we're doing it first in terms of the process and what that will achieve us, because they can be quite expensive. If that answers the question.
It did, Charlie. I think the questions are pouring in. I think we'll take final one. Does this GRC can be utilized for internal audit and SOX compliance purpose? The answer is fully yes, because it has a integrated compliance management and internal audit solution. And Charlie, if you want to add on before we call off the webinar, it's already 10 minutes over. Yeah.
Well, firstly, thank you very much for putting up with us for so long. We've made a real effort to try and be as broad as possible and as generic as possible. Clearly, if you want more detailed, specific information of how we can help you, get in touch with us as soon as possible. We're more than happy to hear from you. And we're not just trying to sell you software. We're really firstly trying to understand what your requirements are to advise you accordingly. Okay. So I hope that really helps, and it's been great having the opportunity to present to you all.
Absolutely. Thanks, Charlie. Yugal, Guru, last thoughts before we close it?
Yeah, thanks for the wonderful audience and many insightful questions as well. My only request to the audience is, I am sure most of you or few of you would be really interested in having a demonstration of this entire product. Do reach out to us. We would be more than happy to schedule a session separately. We will give you a demonstration and we can take this forward.
Yugal?
And I will close it by saying we've said a lot. Let's comply efficiently, and let's take those steps to do that. Yeah.
Efficiently
Thanks,
and
Yugal.
effectively. Thanks, everyone.
Thanks a lot. And thank you so much for joining the session. just ending with that, we are not just an IT provider. It's a complete solution that we will provide to you end to end. Thank you so much, everyone. Thanks a lot.
Thank you. Bye.
Thank you.
Thank you.
Bye.